Something we love to talk about on BNN, but also out in the street, is commodities. Very important, of course, to the Canadian economy, and they're fun to watch on at least the commodities-related stocks on the TSX are fun to watch. So for some insight, some context on commodities, we're joined by John Kurgan, Senior Market Strategist at futures brokerage firm Lind Waldock. Good to see you.
Nice to be here, Michael.
So give us your take on gold here, first of all, because gold either trades on the fundamentals or trades on the religion of it.
Yeah.
So how do you perceive gold?
Well, it's interesting you're starting with gold because gold is the thing it's the first thing everyone asks me about. Yeah. As soon as they find out I'm a commodity broker, it's it's a topic of conversation.
Sure.
Right now, the phones are kind of ringing off the hook. No matter where I go, everyone wants to know about gold or silver, which leads me to believe, from a trader's point of view, it's probably due for some sort of a little bit of a pullback here.
Mm-hmm.
I like gold longer term. Probably going to go a lot higher, but the next $100, maybe $150 is probably to the downside before we go higher.
Yeah. Is it trading on the fundamentals or is it trading on religion?
It's probably a little bit of both at this point.
Yeah.
It's probably a little bit more religion. There's a lot of excitement, ETF market, a lot of things driving it to the upside right now.
Because obviously the discussion that takes place is, well, on one side, no more is being created, reserves are drying up, that kind of stuff. But on the other side of the argument is that it's never traded on the fundamentals, and it's just people think, well,
Well, that's true, but we've been in a 10-year bull market in gold, mm-hmm. and going back to early 2000, I mean, I couldn't talk to gold, anybody about gold, silver. Right. I ran ads in the Globe and Mail. Let's buy silver, $4. Very few phone calls, and that was when Warren Buffett was buying it for his, for Berkshire Hathaway.
Yeah.
Now everybody wants to talk about it. It's one of those things. It's just human nature. It's where the excitement is. That's what everyone wants to get involved in.
Sure, if not there's silver, because silver has had quite a run here just in the past several months.
Silver's up, call it 73% this year. If you really want to get involved in one of the metals, I like palladium. Palladium is trading about $750 here. Platinum, which is the other commodity that gets used in catalytic converters, is trading at $1,700. So, a play if you really want to get involved in the metals market right now is maybe buying palladium, shorting platinum as a spread.
What's the attraction with palladium?
It's just there's a strong industrial demand. They kind of use that for catalytic converters. They're sort of switching over from platinum. Mm-hmm. So it does have an strong industrial use and a strong demand.
So are we talking about ETFs here or the metals?
I would get actually right involved in the trading futures and commodities. And
wow.
For years people have been turned off futures commodities. It's a little too sophisticated. Mm-hmm. But and I ask people, explain to me how an ETF works and how the algorithm is calculated for your local ETF. And very few people can do that. I can easily explain to you how a commodity works on the futures exchange.
Okay, a little more transparent as we look at the price of palladium there. That is a nice run since July that we're seeing.
Yeah,
right?
Yeah, very steady. But any kind of a pullback is pretty moderate.
Yeah, and you're seeing that trend continue. Let's talk about energy here because now natural gas is, we hear that there's a glut. Like somebody said, one of the investment houses said a glut that could last for 10 years.
Right.
We've got a very cheap commodity here. How do you view nat gas?
Nat gas I like as a long-term commodity. Nat gas is one of the few commodities that was down this past year. I think it was down about 23%. There's tons of supply. I mean, the way people are talking, they should be giving it away for free.
Yeah.
But it's one of those things that if you buy it and hold it here or buy some good nat gas stocks and hold them for the next 2 or 3 years, I think you're going to be nicely rewarded.
Really? Because, and part of the controversy, I don't need you to comment on this necessarily, but the Mackenzie Valley Pipeline, a decision is being made there that would bring on tremendous amount of supply at a time when really we don't need the supply, do we?
Yeah, I just, saw that, Michael, before I was coming into the studios, having a chance to take a look at it, but you're right, that adds even more negative story to the nat gas situation.
And of course, the advent of the technology that allows us to pull shale gas out of the ground and into the system, that has goosed the supplies as well. So but you say it's a good long-term play.
Good long-term play. You want a short-term play in the energies? I would look to crude oil. Crude oil right here at $88. Very little pullback. When you're taking a look at the strength of the U.S. dollar recently too, that's going to have a huge impact on these commodity prices. But crude oil is looking very strong. I think it could run to perhaps $100 in the first quarter of 2011. Yeah.
There's your call.
Yep.
Thanks for coming in today, John.
Nice to be here.
John Kurgan, Senior Market Strategist at Lind Waldock, setting you up for the Commodities Trading Day.